The morning report for the 16th of February 2010. The US markets were closed for President's Day holiday overnight, so there's not a lot of lead out from there. The FTSE over did move up 0.5% to close at 5,167 points, or 25 points up. Our market closed down 0.4% yesterday, or down 16 points, closing at 4,546. And look, without a lead out from the US, I expect to see our market stay pretty steady today and float around the same levels, closing around the 4,540 mark today. Now, the gold price, however, did have a move last night, up 0.3 to close at $1,090 an ounce. Oil was down 0.8% to close at $74 a barrel, and the Aussie dollar was up 0.2%. We're sitting just under 89 US cents. I just want to make a quick comment today regarding the state of our economy, and certainly people are hearing a lot of news coming through both on unemployment and rate rises. Now, keep in mind that we're still waiting for the retail or for the end user, being ourselves, to be hit by this financial global crisis. We have seen unemployment figures steady. However, keep in mind there's a lot more part-time jobs in the workplace now and less hours being worked. So what that means is the average take-home pay has actually decreased per household. Now, this will obviously affect the end user and retail sales. We're also hearing, because unemployment rate has steadied, what we will see is an increase in interest rates in March, most likely 25 basis points. Now, this will have an effect on the already strained housing market. Although we're hearing some good figures coming through and the sales reps are talking up, especially real estate agents, we are, when you look deeper, seeing a bit of a more underlying growth. We have seen unit sales in the Townsville area drop off a little bit, although the average price has moved up, but it's only moved up about 3% above inflation over the last 10 years, so it's not fantastic. But we are also starting to see a number of developers and first home builders starting to offer things like boats and white goods as part of the deal to sell the house. So there is a bit of a strain coming through there on the housing sector. So look, keep in mind the markets are recovering, and certainly most stocks do seem to be recapitalised and refinanced. So that's a positive for the markets. We're starting to see the US markets recapitalise, and certainly some good results coming out there. Greece and other European countries look like they're going to be saved, which is fantastic news as far as the markets go. But for your own household income, keep in mind there are some tough times coming ahead in the next 2 to 3 years. So keep an eye on that, and certainly if you do have a large mortgage, you may want to try to knock that off a little bit before you get too far involved or pick up new properties. For more information, go to our website at growyourwealth.com.au.